Hi everyone, and welcome to our webinar about the pain of paying. I would like to open up with a question. Whom of you have found yourselves in a situation where you wanted to pay for something, you actually had the means, but in the last second the payment failed or didn't go through because of something that happened? I had a situation like this in the morning when I wanted to buy coffee, didn't have any cash on me, but they wouldn't accept my credit card. The rejection in that moment is super frustrating. And it almost triggers physical pain, and I'm very sure that you know what I'm talking about. And obviously, the reasons why a payment doesn't go through are very different. And in the e-commerce context, we typically talk about, a lack of payment methods, some security check that doesn't go through, or a credit card that was not accepted. But the result is always the same. It triggers pain, and that's the pain of paying. And the concept of the pain of paying was originally coined by Ofer Zellmeyer from the Carnegie Mellon University, and that was back in 1996. And the concept basically talks about the fact that human beings don't like loss and that they feel pain when they lose something. Because every time they pay for it, they mentally discount in their head and thus incur a loss. And the level of pain can be influenced by the payment experience. The worse the payment experience, the higher the pain. The better the payment experience, the lower the pain. But in very bad cases of payment experience, actually the pain can lead to abandonment in that sense. And this is what this webinar is really about. How can we fully exploit the potential of our B2B web shops by reducing or minimizing the pain of payment or the pain of paying, and therefore really drive sales and more revenue. My name is Malte Huffmann. I'm co-founder and co-CEO at Mondu, and I've been working as an entrepreneur in tech and e-commerce for the last 12 years. Before co-founding Mondu, I started and led to success 2 fashion e-commerce businesses, one out of Berlin called My Brands, which we sold, and the other one, Dafici, in Brazil, which we led to become the market leader in fashion and lifestyle e-commerce in South America, with operations in Brazil, Argentina, Chile, and Colombia. And that company went public on the Frankfurt Stock Exchange in 2019 via the Global Fashion Group. So I was a merchant myself for many years, and I believe that I understand the issues that merchants face, whether they're B2C or B2B merchants. And for Mondu, I've really switched sides now to support merchants through better payment. And Mondu stands for driving innovation in the B2B payment space through better technology. On the consumer side, we saw a lot of innovation happening. And I would say that consumers today enjoy frictionless and almost joyful payment experiences. On the B2B side, however, I think we're still a few years behind, even though the strong growth in B2B e-commerce is actually driving demand for better payment methods that are more instant, more digital, and then can in turn support also the B2B growth going forward. And therefore, we see a huge opportunity and have developed a buy now, pay later solution catering for the B2B context. For us, this means that we provide a great payment experience in B2B contexts, whether it's an online checkout or a B2B checkout in general, and really combine that with financing options directly in their checkout, whether it's net terms or installments. But the idea today is not so much to talk about Mondu, but rather share some of the experience that we've gathered with the many merchant conversations that we had with regards to payment. And we really would like to focus on 3 questions. The first one being, what do buyers expect in terms of payment methods and in terms of payment in the B2B context? Second question is, what challenges does that impose for B2B web shops and B2B marketplaces? And the third one is, what are the requirements for a good payment setup in order to actually cope with the challenges? And before we go into these questions, I have another question to you. When you buy on behalf of your company, what are your preferred payment methods? Credit cards, PayPal, maybe something else? Well, studies show that business buyers in Germany clearly prefer buy now, pay later payment methods. Company credit cards, PayPal, etc., they're all relevant, but there's a clear preference for deferred payment options. And that is because on the one hand, invoice payments are so ingrained in how businesses transact with each other. And on the other hand, flexible payment terms are so important in the B2B context. When companies do business with each other or when they transact with each other, they typically do that based on net terms. That means that a company buys something and then pays for it later. And this transaction is usually done based on an invoice. And actually, the concept of the invoice dates back to 5000 BC. Obviously, back then, the format of the invoice was very different. It was a clay disk rather than, for example, an e-invoice that we have today. But the concept is very much the same. And so it really only makes sense if you ask 100 companies in Germany how would they like to pay online, that 95 will say, I would like to pay based on an invoice. And so invoice payments are clearly in favor and are clearly important. So it's all the more surprising that really only 45% of B2B web shops actually offer buy now, pay later or deferred payment options to their buyers at scale. Why is that? And this really leads us to the challenges of offering buy now, pay later solutions in the B2B context. And we've mapped out the challenges for B2B web shops based really, as I mentioned, on the experiences that we've gathered through the conversations that we had. And the goal here is today to just show those challenges so that we all can learn for our payment methods, payment setups in the B2B, in our B2B web shops. So the challenges that we've seen, they can really be synthesized into 4 major ones. And it's super important to mention that those challenges are actually quite unique to the B2B context. And this means that companies cannot take the same approach as in B2C and typically cannot rely on the same providers as they would in a B2C context. So let's go through those challenges real quick. The first one is your solution that you apply or implement should be really able to approve buy now, pay later for a high percentage of your customers. The second challenge is your solution should support much higher buyer limits than you would typically know from the B2C context. The third challenge is around the checkout experience. Obviously, your solution needs to support a very frictionless checkout process. And the fourth challenge is that your solution needs to be very flexible with regards to payment days and payment terms. So let's dive into each of these challenges real quick. Let's start with high approval rates. So in order to capture the full potential of your B2B web shop, your solution needs to be able or needs to enable you to actually offer invoice payment to as many customers as possible in order to maximize conversion rate and revenue. On the other hand, buy now, pay later is an unsecure payment method. And that means that you don't want to incur too much loss offering it to too many customers. And this means that a best-in-class solution is really able to identify and manage risks very effectively on the one hand and can guarantee high approval rates at the same time. And there are really 2 risks that the solution needs to manage, right? One is fraud risk and the other one is credit risk. And we see 2 very prominent challenges typically with regards to management of these risks and therefore also the capability to underwrite at scale. One is being able to offer invoice payments also to new customers. New customers are new to you. That's why they call it new customers. But it also means that you don't have any payment history and you don't have therefore any first-party data. And the second prominent challenge typically revolves around legal forms. So in the B2B context, buyers come in very different shapes and forms. And they come in different shapes and forms with regards to the legal entities that they have incorporated in. And so you have public companies, you have limited liability companies, you have clubs, public institutions, sole traders, even freelancers. And a good buy now, pay later solution in B2B needs to be able to identify all of them on the one hand, but also needs to be able to underwrite all of them. Let's go into the second challenge, the buyer limits. In order to capture the full potential of your B2B web shop, your solution needs to be able to cover a broad range of average order values and also buyer limits. Much higher actually than in the B2C context. And we see that average order values on average in B2B are 10x higher than in B2C. And on top of that, you have peak average order values that can go up to 6 digits, maybe even 7 digits. And on the other hand, next to just the average order values, businesses tend to buy more frequently, and therefore your exposure also increases obviously with every single order, and therefore your buyer limits need to be able to support that. So a solution needs to support, on the one hand, the average order values, but also the higher the higher buyer limits. And those, as I mentioned before, are typically higher than, especially compared to the B2C context. Let's go into the third challenge around the frictionless checkout experience. In order to really fully capture the potential of your webshop, the checkout experience should be intuitive and simple to really support a frictionless flow. And that means that you want to have few clicks, few screens. And the second element here is that you don't want to have any delays. And this means you don't want to have, or you actually want to have a solution that runs the decision engine and the underwriting decision in real time, basically, not to compromise the conversion rate. And this focus on frictionlessness is a trade-off with your risk management, obviously, because the fewer screens and data fields you have, the less data you can capture for your risk algorithms. But on the other hand, the higher probably the conversion rate. And at Mondu, we really only submit, or we really only need for the decision name, company name, and address as part of the checkout process. And then we run a real-time risk check that goes extremely fast and actually sub 1 second. And this is then obviously super seamless for users. Also, you want to optimize for your buyers to actually maximize conversion rate. And our product team, they constantly are testing our widget through experiment to then drive conversion. And those experiments are typically run in an A/B test fashion and really aim at improving conversion rates constantly through this methodology. Let's finish up with the fourth challenge, flexible payment terms. In order to capture the full potential of your webshop, you should be able to parameterize the payment terms as far as possible. Every industry is obviously different, and there are very inherent payment dynamics in each of these industries, and you as merchant obviously know those really, really well. On the other hand, every customer's need is also different. And so you want to be flexible in offering to them the payment terms, and even let them choose as to in how many days they would like to pay. And at Mondu, our solution is really fully parameterizable in regards to who pays for the solution, in how many days customers can pay, and therefore is 100% flexible and also supports basically that goal of driving conversion in that sense as well. Also, what we see is that beyond just net terms, installment payments or split payments become more and more favorable, and those add to those flexible payment terms even more, because especially on longer term purchases, you want to be able to potentially offer your customers installment plans of 6 months with monthly payments or even 12 months with monthly payments. Now, what I want to show you is how the solution works and really unleashes its effects when it is well done. And we would like to do that in a real life example and with the example of Yonto Comet. One of our customers, of our early customers, is this very successful company, German Mittelstand in the beauty industry, Yonto Comet. And if you do treatments in spas, you probably even were treated already in one of their treatment beds, or have come across their products in one of these treatments. We first introduced Mondu as a payment method to replace their existing invoicing solution. The problem with the invoicing solution that was there was that customers had to actually ask for invoice payment, and that would then trigger a very bureaucratic process on the Yonto side, and this process would actually take several days until Yonto would actually allow for the customer to pay based on an invoice. And beyond the unpleasant experience, I would say, for the customer, having to wait to be approved, the approval rates themselves were actually not that high. So Yonto wasn't happy with the solution, especially because of the manual and also operational work that was entailed also by actually running the solution in that manner. And after having introduced Mondu, the conversion rates in the checkout increased by 21%, and the average order values increased by 25%. And this resulted obviously in a big step up of the revenue in the web shop. And this was really mainly driven by the very high approval rates of more than 90%. And Yonto is at the same time fully protected against default at all times. And on top of this, Mondu saved Yonto also hours and hours of operational work, which they had actually complained about. And based on what we have seen as first experiences with Mondu, we have really partnered up and thought about how we can actually put their payment setup and bring it to the next level and really look at it in a very holistic way. And we have now expanded with them into their second market, Austria, serving their buyers there. We have also integrated Buy Now, Pay Later in their offline sales processes, and we've supported them on trade fairs where sales representatives actually interact with customers directly in a presential form. And third, we have also launched the possibility of split payments with Yonto Commit as well. And this is basically substituting their rather complex product setup with leasing and financing providers for their larger ticket items. And this is really our mindset when we go into a partnership. We really would like to figure out together with our partners the optimal payment setup for their context. And this is always obviously a challenge, but this is also what makes our work so exciting on a day-to-day basis. So in closing, I hope that I was able to show you the relevance and importance of Buy Now, Pay Later as a payment method in the B2B context. And also, obviously, the challenges that solutions face and the requirements that there are to really fully unleash the full potential of a solution. And I think, or I hope it also became clear that Buy Now, Pay Later solution needs to really cater for the B2B context. We cannot rely on what we know from the B2C context. And in any case, it's always important to address the pain of paying in the B2B context as well, to really put a smile on your customers, and obviously what's also extremely important to every one of us, to drive conversion rate as well as revenue. So to wrap this up now, I would actually like to ask two questions that typically come up in my speeches, and it could also be interesting to you. So the first one is, does Mondu really cover the entire default risk? And the short answer is yes, it does cover it. That's exactly our USP, our unique selling proposition. By integrating Mondu in your checkout, you are enabled to offer your customers deferred payment options. And we strongly see, and as you saw also in the Yonto Commit case study, we see revenues increase. And at the same time, you are always fully protected from the default risk, even though Buy Now, Pay Later is an unsecured payment method, because that's something that we would then cover. So you're fully protected. The second question that typically comes up is, does the 90% approval rate only cover existing customers, or is this across all customer types? And the answer here is also the 90% typically works across all customer types. And as I mentioned in one of the challenges of a good Buy Now, Pay Later solution in a B2B context, especially being able to also score and then underwrite new customers is tough. But that's exactly what we set out to solve. So really, when we think about approval rates, we really think about across all different customer types, new customers, existing customers, and also different customer groups of segmentations that you may have in your context. So I hope those questions were also interesting to you. I will wrap it up here. I hope you liked the session, and I hope that we see each other again in another occasion. Thank you very much for your attention.